Okay, so this is the Bitcoin chart. I made a post in the Discord. What do you see? Zoom in. Well, this is what I see. Right. First of all, Bitcoin took the previous all-time high. What? In August. So that happened in Q2, right? Took the previous all-time high. What did it do immediately after? It corrected. That correction eventually turned into a change in state of delivery to the downside, which is what we have here. You can see up close candles, down close candles, above an old high as a change in state of delivery. Now, we have retested that change in state of delivery. We have dropped lower in the market, and the market has shifted structure. But I am still bullish on Bitcoin, but I'm not going to be bullish until I get below a original consolidation, a previous original consolidation, a previous consolidation, a previous level of accumulation where price did not leave behind a clean low or a clean high. This is a clean low, right? This is a clean high. Inside of this range, for price to continue, if you split this into discount and premium, right? If you split the range low, if you split the entire range into discount and premium, you get this. Below this level is discount. Above this is premium. My next plan is to short the premium into this key level because this is a discount key level. And I expect a reversal to happen at this level, which is at around 105,000, 104, 105,000, right below this low. So that essentially is the plan. It's quite simple, really. It's very simple, very, very simple. We have the reversal, low risk short. I won't call this a low risk short because it's in too much of a close proximity to this. And because of the nature of this is a low resistance. If you drop down to the lower time frame, this right here is going to be a low resistance liquidity run, right? This will be a low resistance. If you drop down to the lower time frame, all that there is going to be a low resistance liquidity run. But we're on the higher time frame, right? The daily chart, and again, dropping lower changes to the delivery, continuing lower from this fair value gap. It's a very small fair value gap. Got in there, got out, right? This was the last protected high. So with this, and after dropping lower, we can now call this a first stage. So the first stage has happened. The second stage has not happened yet because all of this, including this right here, all of this is still part of the first stage. And the reason is simple. If you look at all the candles after the change in the state of delivery, remember, this is another change in the state of delivery. Let me make the changes in the state of delivery blue so you know exactly what it is I'm referring to. After this change in state of delivery, we do not have a close above any bearish candle. So we are still in the downtrend on the higher time frame. Price is still in the downtrend, and price tried to, but it failed to. It accumulated and it continued lower. So this is the last protected high. Anything inside of this range, remember, let me mark it out. Last protected high, last original consolidation, low, internal market maker buy model. Anything inside of this range, anything inside of this range is free game. And price will seek to get to those levels before it reverses. Currently, an idea that I could frame a trade with is this candle and this candle's range, right? Let me open up Ethereum. I don't want to talk too much about this so I don't make the video extremely long. But again, whoever wants to see the value in it is going to see the value in it, right? If you look at that exact same candle on Ethereum, right, you can see it is a PSP. But more importantly, if you look at this range right here, you will notice that Bitcoin took the low of the range, right? Ethereum right here also took the low of the range, but it has been accumulating below that level. It has touched it multiple times. But that's not the important part because right here you will notice that we don't have SMT. There's no SMT here. And the reason there's no SMT is because Bitcoin also took that low, right? So what I am expecting to propel price higher, because I won't just long this, I won't just long the low of this candle because range low, range high. That's not how it works. For me to confirm that we are going to get a reversal, right, based on this daily candle range, I'm going to need to see Ethereum tap into this low. And the reason I want to see Ethereum tap into this low is simple. We have formed equal highs at the top of the range. Is a smart money sell-off. So we have equal highs, smooth highs, and the market is in a range. So we want to see it purge the low of the range. And when it does purge the low of the range, we're very likely going to have SMT with Bitcoin, because that exact same low on Bitcoin is this low right here, right? You can see the crosshair. Now, if Ethereum takes this low, Bitcoin does not take this low, that then would give me a confluence to say, okay, I can look to trade price into this internal range liquidity level, right? A fair value gap, which is above a former short-term high, right? Which a lot of people could call inducement. A lot of people could call, I don't care what they call it, right? Also, if you notice, this candle's high. If you look at this candle's high right here, where the fair value gap, exactly what the fair value gap is. If I go to the weekly chart, what do you see? Exactly, right? So the bias is pretty simple. If you zoom out, you can, to a reasonable degree, be able to assess what price is doing, which is your narrative, and form a bias based on the narrative, not just some pattern or some candles, right? It's all technical, and you need to just slow down, breathe really slowly, go into the charts, go into the higher time frames. I'm not talking some 1 hour chart. The 1 hour chart is not the higher time frame. The 1 hour chart shows you nothing. Go up to the 4 hour at least, the daily chart, the weekly chart. Look at that. Look at price. Look at where price is coming from. From where it's coming from, try to substantiate or try to predict. I don't want to use the word predict, but try to use where price is coming from to project into the future, and to a certain degree of accuracy, depending on what strategy you use, predict where price is likely to go, right? Because that's all we're doing as traders at the end of the day. We're speculators. We are not just, some flimsy traders here and there. After I took my longs, you can see I was expecting price to get into the fair value gap, but it failed to do so. And I noticed that it was failing, and I closed my position up in the wick, and the premium of the wick. I did that with the community. If you're in the group chat, if you're in the Discord channel, you would have seen it. It's still there. I don't delete anything. If you want to find it, you will see it, and you can use it to study, right? I closed my long trade, which I had all the way from here. I called it a root market maker buy model because I'm expecting price to reverse sharply after the target has been met. Now, I'm not expecting this to come until this has been met. And I'm not expecting price to get to this level until Ethereum confirms the reversal, right? I'm going to need Ethereum to confirm the reversal. And then that confirmation with Ethereum dropping down into that low would form SMT with Bitcoin. And that would in turn confirm the reversal to the high. Again, it is only valid if Ethereum drops down into the low, forms SMT with Bitcoin, and at the same time confirms that SMT on the lower time frame while Bitcoin still leaves this low untouched. If Ethereum takes the low and Bitcoin also takes the low, or Bitcoin and Ethereum fail to confirm that SMT, there's nothing that stops the market from going all the way down here, right? Again, the market doesn't owe you anything. It's your job to, within reasonable expectations, based on a model that you have backtested and you trust, you trust to have profitable results, to manage risk and follow the rules of that model, because you can't just jump around doing whatever you want. I have no business with price until either of these key levels have been gotten to and respected. That is how essentially you increase your win rate. Good things are done by removing the bad things, right? Progress is made by taking away from your journey the things that reduce or slow down your progress. You don't necessarily make money by, you know, chasing money. You make money by removing the things that take money away from you unnecessarily. It's that kind of logic. You don't become profitable by chasing profitability. You become profitable by removing the things that make you unprofitable. And to do that, you need to find what exactly is making you unprofitable. I'm not the one who's going to tell you that. I have no idea what your trading journey is like. But if you journal and you look at yourself, you study yourself, you will find some degree of success in this. There's no, there's no argument about it. If you try hard, you truly go at it with unwavering resilience and determination, I promise you will find some success in this. You will find yourself start to understand setups, and you will find yourself not chasing setups. You will find yourself becoming more patient. You will find yourself taking higher quality setups, and you will realize that it's been you the whole time. It's not the market makers that are manipulating your stop. The market makers don't care about your stop, right? They don't give a shit about you, right? The market does not care about who you are. Once you get that into your mind and you realize that you are the problem, everything will change.